A one-stop shop for cryptocurrencies and digital securities. When others ran from regulators, we found a way to work with the biggest. The crypto trading powerhouse that brought you the first SEC-registered security token IPO offered to the general public is now ready for the ultimate bulls versus bears showdown. The question is, are you? Apply now at inx.co.
Well, everyone, thank you very much for joining us. I'm Douglas Borthwick. I'm the Chief Business Officer at INX. We've got a great host of folks here today. We're going to go around, and if everyone could introduce themselves, that'd be fantastic. Shai, we'll start with you.
Hey, good evening, everyone. Good afternoon, good morning, I don't know. My name is Shai Datika. I'm the CEO and the founder behind the idea of INX. I'm coming from almost 30 years in the traditional financial market. I act like as a trader, advisor, director of institutions, and member of investment committees. And I have a lot of experience with regulators around the world. And during the past 4 or 5 years, we are running this vision of blockchain cryptocurrencies in a regulatory way.
Thank you. Peter?
Hi, I'm Peter Chur. I'm head of macro strategies with Academy Securities. I've looked at crypto, been positive on it, currently fairly negative on it, but we come at it from a more macro standpoint.
Thank you. Derek?
Hi, everyone. My name is Derek David. I'm a writer from Forbes Crypto and Digital Assets team. I'm also a designer for Rain, which is a corporate card for Web3. Nice to meet you all.
Thank you. John?
Yes. Hi, everyone. So my name is John Azerwal. I'm the Chief Blockchain Officer at INX. I come from traditional finance, but I'm also in crypto since the past 8 years full time. So I try to bring kind of a both view on the market and on what we're talking about.
Great. Thank you, guys. Now we've got folks on here. Derek's calling in from Philippines. Peter, I'm guessing you're in Connecticut, and John and Shai are in Israel. I'm in New York. So thanks all for being here. We've got a lot of stuff to cover here today, but first we're going to start with the title, which is Burn or Build. Is this whole environment that we're looking at right now, is it burning down? Or is this actually something we should be cognizant of and it's time to build? I think it's sort of really, I think this is a way for us all to establish our stances on crypto and where we see the market right now. We'll start with you, Peter.
I think we are kind of burning a lot of things down right now. I think you're seeing some flaws in the ecosystem. And ultimately, I think when the dust settles, we will be in a better position to figure out, okay, what works? What are the real use cases? What are the sustainable use cases? What are the systems that had the sustainability? What are the institutions that were built properly enough? So I think, it can resurrect itself, but I think we're still only halfway through seeing a lot of the problems, and each problem kind of ignites a new issue that we're facing. And we're probably going to see a lot more serious view of what are the real use cases? Where is this most useful? What can be done about it? And I think there's going to be a lot of good business opportunities out of the back of that. Having said that, I still think we're, still only halfway through this current kind of crisis or winter, as you would call it.
John, what do you think?
Well, it's a dumpster fire right now, right? No question about it. The market is down between 50 to 80% in average across, the top 100 the coin by market cap. So obviously, everything is down right now. But having been through now, I think 3 bear cycles, right? It's all over again, right? And eventually, builders continue to build, and I think crypto is going to come back stronger from it.
Great, Derek.
Yeah, I totally agree with the points Peter and John made. When the dust settles, I think we're gonna see like applications that actually have real world use cases. For instance, I feel like right now we're definitely burning a lot, but it's also an opportunity for companies, venture capital firms, to actually find ideas that actually will come out stronger after this crypto winter. So yeah, it's a lot of burn, but there's a lot of opportunity.
Shai?
I think it's not burn or build, it's cleaning and building. I mean, like, you clean all the bad elements from the market, those who are not working, maybe because of bad technology, bad ideas, lack of regulation, and building on those elements, on those bases, you build our new infrastructure and our new vision. You know, when you start something new, and this is fucking big, you know, to change the way that the financial industry is working for the past decades or 200 years, to change it, it takes time. So there are many things that many companies, many visions that are trying to come into the market. Obviously, not everything is good. We believe in regulation. We believe that with no regulation, lack of regulation, it's a problem. So what we see now, I believe, it's cleaning. You call it till the dust come down. I call it clean. Take out all the not good things and leave only the good things, and to grow up from there.
Peter, would you characterize this as old world versus new world, or is this new world that we're talking about just a mirage?
No, I think there's two things that kind of tie to me and what's going on in the new world that are related to the old world. So one is you kind of look at regulation, and there was a reason that exchanges are regulated, that banks are regulated. And clearly crypto has always kind of had this, I think, vision of almost a self-regulatory or self-governing body, and things would correct themselves. And I think what we're seeing is kind of some of the naivety that was out there is being punished. People weren't paying attention to leverage, right? Well, I'll give you 21 leverage. I'll give you 25 to 1 leverage. I'll give you 30 to 1 leverage. And no one thought about, A, is that doable or not? So I'm not sure whether that needs regulation, or just this first wave, this latest wave of investors who are getting taken out will do it to themselves. And they will look at entities and say, hey, we want financial audited statements. We want to know what you have. And the other part of this too is a little bit more clarity to me. One thing I find very confusing, you know, from a traditional finance perspective, is you have entities that seem to act like a trading institution, plus they act like a private equity institution, and maybe they act as custodial. And these things are all very mixed, and I haven't seen a clear delineation of this is customer assets, this is my assets, this is assets I can, you know, for lack of a better word, it seems plunder if I feel the need to. So I think it needs to be regulated, but whether that regulation can come from smarter investors forcing companies and really being much more clear, like, I will only do business, or I will only keep my coins at this place or that place because I trust them. I think that's where the opportunity comes. So again, I think it needs some of these things that exist in the traditional finance world in terms of regulatory capital requirements probably should have existed in crypto. I don't know that they have to be forced on it, or now that people have seen some of the flaws, there'll be a lot more clarity in that.
John, what do you think? It's the old world. Is it the old world that's burning, or is this new world real? What's happening?
Well, I think we should not forget where crypto is coming from, right? Eventually, crypto is a decentralized system, right? And the reason why crypto exists in the first place is because, and to avoid intermediaries, is to avoid centralized pool of systemic risks, right? So, you know, decentralized finance, all these new applications, at the end of the day, into any particular third party, right? So I feel like a lot of companies, you know, came around and basically, you know, saw the opportunity and started building those, you know, very big centralized pool of risk. And we are seeing right now the limit of this, right? So yes, regulation is important. Yes, this industry needs to be regulated, but also the reason why crypto exists is because it has a strong decentralized ethos that should avoid all those risks that we are familiar with within the traditional system.
Derek.
Yeah, so this reminds me of how Uber started. You know, there was like a lot of regulatory challenges, but eventually the government and innovation found a way to actually work together and make it work. So right now we're seeing, like, for instance, like taxis merging with Uber. You know, so I don't think the traditional finance will be necessarily an old world, but I believe they have to, like, work together, collaborate to actually build a new world faster. using their resources and everything, we have to also acknowledge like the government has a lot of resources and they have all the control for regulatory. So eventually they have to like find ways to like approve policies, which is like we're seeing right now. There's a lot of policies that are being approved that are in favor of crypto industry in general, right? Initially, there will be like a sort of temporary setback that will kind of like slow it down, along with what's happening right now with inflation rates. But like we're gonna see 1 or 2 years from now, I think we're gonna see a high rise for like crypto companies, startups, and like working with government altogether.
Shai.
I think the new world should adapt some of the rules of the old world, and the old world should be more flexible, accepting the new world. I mean, like, Peter, you spoke about self-regulatory bodies. I don't think that banks could work with self-regulatory bodies. And I see crypto as a revolution. And it's going to control on the future financial world. So I don't think crypto should have like a self-regulatory body. I'm more conservative on this. I think under full regulatory umbrellas. And you spoke, Peter, about leverage. I don't think Celsius had any kind of leverage because they gave loans with no limit. So if Celsius, for example, and I'm sorry, Celsius, if anyone here hear me, but it's only an example. But if Celsius had saved capital, similar to banks that they save capital for loans to clients, they would have been in a much better position now, and the clients would have been with their money. Because if you need to keep 10% capital of the loans, it means one, you have 10% capital, you're not going to lose all your money. Second, you cannot give loans like no end. You can give loans up to 10 times from your capital. And this is number one. Number two, you remember 2008, Lehman, Dodd-Frank after that? They didn't send all the MBSs and all the derivatives and mortgage out of the windows. No, they said it's good, it's here, but it needs to be supervised, reported to the regulators, transparency to the regulators, and rules. So this is what I believe about the new world and the old world.
John.
Yes.
Yeah, but Shai, here's the thing. I mean, if too big to fail banks such as Lehman, right, went down, it also means that there were a lot of excess and probably bad risk management also in the old world, right? The only difference that we see right now with the new world, like Celsius, like you mentioned, is there is definitely a problem of risk management here, right? That things were not properly managed, the risk was not properly managed. So the other difference is that back in 2008, you had the US government here to actually bail out all the banks and keep the system afloat. Crypto is a much more, I would say, free market ecosystem than the banking system, right? So,
but the question is, John, was there only with Celsius only bad risk management, or there should have been like bands that the risk management should have been in those bands, and Celsius should have managed the risk between those bands? And this is what I think. Bands must be part of the game. You cannot give leverage with no limit.
Yeah, and I think part of this, again, is hopefully you will have a smarter group of investors, right? Investors who will demand the disclosure to say, I am not going to put my money in, if it's Celsius or someplace, until I know what you look like, what your rules are, how segregated it is. So some of it, whether it comes formally or is just going to come from investors demanding this, because I think a lot of people learned they did not ask some of the basic questions, right? They didn't ask, how is this company set up? How much money are they lending? And they had none of that information, and yet they willfully kind of turn their money over. So I think a lot of this comes to rest on the investors made really bad decisions where they didn't take into things that they should have taken into account. And hopefully that becomes part of the policing or regulatory, self-regulation of this industry, is investors start saying, no, unless you can show me some of this, we're not involved.
Well, let's move on.
John, before you jump in, I'm sorry, and Douglas, Peter, I have a very good question for you. It's not that I'm looking for an answer specifically from you, but we know that Celsius gave the option to redeem some of the money to some of the clients. Do we know to whom? Do we know if they did it like to all the clients, pro rata to their investments, only to preferred clients? Do we know what is the story with Citibank that helping them? There's no transparency. It's not open to the public, and this is what you said, Peter. Investors should have the a vision, and they see the investment policy of the company, and everything should be publicly. It's not you are fucking trading with $30 billion of clients' funds. You cannot manage it like a small grocery store.
Right. All right. So
one sentence here. I'm jumping in. I remember, Shai, back in 2017 when we started the process with the SEC. I felt like one of the big value proposition INX was bringing to the table is going public. And as a matter of fact, we went public even before Coinbase, right? So we are one of the only public company that are running a crypto exchange in the US. And I think we bring that transparency that is very much needed right now.
That's certainly true. But look, FOMO sometimes blinds people from sense. I think we've seen a lot of that, and it's getting brushed out. But let's ask a question. Derek, when's it going to bounce back? When do you think crypto winter's done? When are prices going to start rising again?
That's that's a great question, but like there's obviously a lot of factors that will make that possible, making it bounce back. But
I hear crypto moves fast.
Absolutely. The way we're seeing it now, we're actually on the path to rising crypto prices. But like there's also the venture capital part and like startups part where a lot of like money are pouring into startups, right?
I'm not money pouring in. I'm seeing a lot of guys licking their hands right now, licking their paws because they got absolutely burned. Peter, what are you thinking right now? When's it going to bounce? Because it seems like you think it's about to go to zero.
We might see a little bounce. I think there's a lot of people heavily incentivized to prop it up from around here, right? It's if we get much below 20,000, 18,000, no one who's kind of invested in the last few years has made money. So I think there is a certain group that's probably incentivized to kind of try and prop it up. I don't think they'll be successful. I think we get one more breakdown. And from there, it's really going to come down to what emerges, what institutions emerge. Can you get institutional trust? To me, you mentioned FOMO, and I think we kind of gone from FOMO to FOHO, fear of holding on. And when I was positive on this 2 years ago, it was all about adoption, right? You had PayPal announcing plans, you had Tesla, you had Coin. It became so much easier. And right now, I think we're in the opposite phase where people at the institutional level who may have been thinking about putting into crypto 6 months, a year ago, are really going to be on hold until they see something about an ecosystem that they can have more faith. So I think that's where we're at right now is we probably go down because I don't see where that new adopter comes in. Maybe if it crop up, maybe if we get FOMO back. But I think to me, so much of this is about the new adopter and the institutional class who is kind of on the verge and some were doing it. There's going to be a lot of second thoughts given what they've seen and given kind of all these various closings. People are going to want to engage, do a lot more due diligence. And again, all that I think fits what you've been talking about is this is going to be a cleaning out process, a weeding out process. And those that kind of can prove to people that they deserve to exist will have that opportunity.
Shai, I'm hearing all the time that Bitcoin's an inflation hedge. Is it?
I don't think Bitcoin is an inflation hedge, not at all. Bitcoin might be a safe haven like gold when people are looking for a safe place. But the question is trust. How many people will trust that Bitcoin is going to be tradable and will keep its levels? Doesn't matter if the level is 20 or 10 or 40. This is the main question, the trust behind this. So if you ask me if Bitcoin is protectable from inflation, my answer is no. If you ask me if Bitcoin is a safe haven from disasters, maybe yes, but this is only a question of trust. But if I go back to what you asked Peter, I think there's another way to look at this. And sometimes I suggest people to think about the value or the market cap of the Bitcoin like this. What is the M1, M2, M3, the total assets in the world? What is $120 trillion? Depends if you count the black money or something. So it's around 150, 160 trillion dollars. And now the question is, how much of this the Bitcoin can take? I don't think it should go to 5%. It sounds crazy for me that the value of Bitcoin should be 5% of the total assets in the world. If you ask me, it should be about 0.5%, 1%, not more than that. It means that the market cap of the Bitcoin should be something between $500 billion to $1 trillion. This is what I think. Now divide.
Crypto is seen as it seems a speculative asset, I think, mostly in the US right now. But Derek, what are you seeing in Asia? What are people using crypto for out there?
What I've seen so far that came out strong, like for I'm going to give an example for like Axie Infinity. Like a lot of people have started like playing with Axie Infinity, making an equivalent of monthly income here in the Philippines. So that's really valuable for a lot of like Filipino citizens, because like they could like play games and make money directly from their phones. But the interesting thing is that most of these people don't actually know how it works behind the scenes. I think this we're gonna see more of these real world use cases where people are gonna feel the benefits of like crypto without having to know it's crypto at all, or without knowing how blockchain works. And like games are only one thing. Other things could be like education or community driven projects as well. There are some NFTs that are good, that are very community driven with ties in the real world, that actually does something like for the environment. So those are considered a great thing as well.
Peter, what do you think?
So, I'll limit this to kind of one use case that I see that I think is very important is if you're in a country there, you've got reasonable wealth and you don't trust your government, clearly crypto is a good use case. And, I do have the pleasure, I work with 14 retired generals and admirals, so we spend a lot of time on this. And I think two things bother me about the use case right now from that perspective is that China in many ways is the perfect use case, right? You have a very large population, a reasonably middle class population that probably should not trust their government to a large degree. But what worries me is China is clearly trying to crack down on crypto. And the two ways to crack down are you can keep trying to enforce that your people can't get access to, can't use it, or they can maybe try and do something to help drive the price lower, because who cares if your citizens have it if you drive it much lower in price. So to me, I think China's crackdown is not yet done. I think that's something that's really important, is how China plays this, because I would not want to necessarily stand in the way of China. And we're seeing...
Peter, yep. China steps in the way of free speech sometimes. Is that something that you want to go? Do you agree with that as well?
No, but I think if you're, again, as an investor though, let's put it this way, they also took IP and people put their IP there and they had it stolen and now regret doing that. So I think this is something that's a real issue to me, is China is turning more and more inward looking. You look at it across the board, their promotion of digital yuan, they are turning away from the globe. And one of the things that bothers them as a nation is their ability for people to be outside the system. Crypto gives them that. So I'm a little bit concerned on that. And what dovetails, unfortunately, I think with that is that the US government realizes that crypto probably is not helpful in a world where we've tried to use monetary policy, where we've tried to use sanctions as our main force or tool of leverage over other countries. So those two combinations, I think there's a lot of questions at the national level of what they want to do about this, and geopolitics are playing a role. I think that I don't know whether they'll be able to enforce these or push it down, but that to me is a real concern.
John, where are the institutions? I've been hearing for the last year, institutions are coming. Now, and I know that at INEX, we talk to a lot of institutions, so I know my answer, but John, what do you think?
Can I track back Douglas on the inflation hedge thing? Because I have two things to say, I think important. The first thing is, obviously Bitcoin, we thought it was an inflation hedge. It's not, right? Inflation is at 8% across the globe. It's running super hard, and Bitcoin is going down. So no, it's not an inflation hedge. So what is it? I think it's more an hedge against loose monetary policy. This is really what it is. Because at the end of the day, if you have this trilemma that the Fed has, they cannot save the bond market, the stock market, and the dollar. They have to choose the two of them, right? So if the Fed is actually serious about fighting inflation, which I don't think they are, by the way, then Bitcoin will do terrible, right? Bitcoin will go down. But if the Fed start printing again, right, and start putting rate again, right, to actually save the dollar, then Bitcoin will do extremely well. So that's the first thing.
Let me jump in before we get. I think it is a great hedge for inflation, and I think that it's because there's no manipulation in it, and I think it's very forward looking. When we turn to zero interest rate policy in the United States, if you bought Bitcoin back then, well, goodness me, you've done pretty well for yourself. But if you stayed there in the dollar, disaster. When I think about, how education's gone down in Bitcoin terms, or the price of homes has gone down in Bitcoin terms, but I'm looking at a much larger picture as opposed to the very small picture that we look at for this past year. I think it's been a marvelous hedge for inflation, and I'm glad that I've got some wealth in there that covers me. And I think, we'd probably all agree on that one.
But inflation is really a thing for the past 6 months.
Well, inflation has only been a thing for the guys that report on inflation for the past 6 months. But I think we'd all agree that for the last 10 years, we've probably been thinking that inflation has been a disaster, and it just hasn't been reported correctly. Because you take out food and energy and everything else that really is going up in price. Well,
and one more thing about this, it's like, I think this bear market in crypto is very different than any other bear markets we've seen in the past. I mean, we let's not be in our small bubble where I say, oh my God, crypto is going down 50, 70%. But, look what's going on outside, right? All the NASDAQ, all the tech stock, all the traditional stuff, bonds has been ripped off completely. So the truth is everything went down, right? So, and crypto as well. And so I don't think really this bear market is really driven by the crypto fundamentals, even though we have seen all the excess and all that. But I think it's driven by the macro, and Peter knows more about it for sure.
Well, let's go back to institutions again. Where are they?
I tell you, let me give you an example. One of my hats is I'm acting as a director and a member of the investment committee of the biggest provident pension fund in Israel. We have like 85, $90 billion under management, assets under management. A year ago, we decided to buy Bitcoin, maybe a year and a half ago. And I'll give an example of what we needed to face. One, let's say that we are buying Bitcoin, actually Bitcoin. So as an institution, how do we hold that? I mean, like, are we going to have a wallet, warm, cold? Who are going to sign this? It was like, we know how to manage money in the bank. We know how to transfer money in the bank, but what is it? A wallet, signers, 5 signers. We were afraid of this. Number 2, we looked for custodian. We checked BitGo, we checked many others, and we needed to rate those institutions, because when we use State Street or Bank of New York as our custodian for securities, we know what the rate, and we know S&P, and we know BitGo not rated. So this is the second example of institution. And I tell you like this, it took us 3 months to investigate, to do all the internal job. We finally bought, it's public, I can say, a $100 million worth of Bitcoin, and we sold it with a big profit. But we received a letter from the Israeli regulator where he said, maybe it's not responsible. How did you classify this? So as an institution, and I'm an institution, not family office, not hedge fund, institution, I think what is needed is more clarity from the regulator and the proven from the regulator. This is the problem. I can tell you that after our experience in Israel, I don't believe that any other pension fund, provident fund, insurance company will go and buy crypto because of this letter asking questions from the regulator. Everybody will say, why do I need it? So until we see clarity, clear path from the different regulators, it will be very difficult for institutions to get into this game.
Peter, you spend a lot of time jetting around, seeing the clients all around the world. What do they always ask you? Hey, what's going on with Bitcoin? How do we buy it?
I think a year and a half ago, people were asking that. Conversation has slowed, but I think they brought up a lot of the same questions that Shai has brought up. It's, let's say you have someone really championing it within your firm. It is still not as straightforward as anything else, right? If someone's trying to convince you to buy high yield bonds, you can go and check your rules. Are you allowed to buy high yield bonds or not? Fine. You can figure out who you should trade with. And you can do all these check the box type things that are fairly standardized. I think once you go on to this, right, are your accountants familiar with Bitcoin? How are your accountants going to treat it? Are you going to sign off that you have it? Do you have to market it all the time? So I think, Elon Musk is quite, aggressive in terms of his willingness to push the envelope. And I think, his involvement pushed other people to take a look at it. But I think a lot of other investors, it's just very difficult. And if you're a corporation, does this move this around? And that's why, to me, I'm bearish right now is I think any impetus that was going on is kind of gone, right? You're not having the fear of missing out necessarily. And all these regulatory questions, all these questions that would traditionally be regulatory still exist, but they're even worse because you can point out almost every single day, oh, this crypto company kind of went bankrupt or they're out or they're in unwind mode. And I think companies are going to have to do a much better job of really showing this is what we are. We are a custodian. Here's our assets. Here's your assets segregated. Here's what we will try to do to make you comfortable every day so that you can make your auditors and your accountants. So I think it's got to be much more formal. We kind of live in the Wild West where you and I, we can decide, okay, we want some in and we can find a way to put it in. Family offices can be a little bit more aggressive because they only have responsibility to their family and their future generations. But I think corporations and traditional asset management, when they look at it, it's very, very difficult to get comfortable that you have all the boxes that you're in place. I'll go way back when, and I was in the early stages of derivatives. And, I was in my training program back in the 90s at Bankers Trust, which says how old I am. But our head of credit came into this and we're all like, oh, this is going to be boring. This is going to be the worst part of the presentation. And all I remember from my 2 months of training was his speech. At the end of his speech, he talked about credit and said, it's pretty easy to see if someone can pay. What's really difficult is to figure out if something is willing to pay. And that ability to kind of look into the souls of someone and say, are they a good customer? Are they a trustworthy counterparty? Are they an entity I want to do business with? And I think that really resonates to me in what we've just seen in crypto, where people are going to have to go back and say, are we getting enough information about the people, the company, and their behavior to trust them? And I think that took, 5 steps back with what's gone on in the past month or so. And that's going to be a huge problem for adoption from institutional investors right now.
Yeah, this goes back to something that John mentioned earlier. I think that when we got into crypto as a company for INX, we realized it was so opaque and people needed to see absolute clarity. And the only way to do that was by doing a public offering and doing an IPO, being a public company. And I think that it is absolutely key because then you've got people looking at all your numbers. They see the insides and outs. I mean, I think we've gone through enough exams with enough regulators now that people know what they're dealing with. And it's very important. But next time, Peter, you've got clients and they've got questions, just bring me along on that sales pitch. I'd love to take a private jet. But the next
well,
question,
hopefully it's your private jet.
The next question though is, where's retail then? How about retail? Derek, I mean, is there an excitement in Asia right now for crypto, or are they just run for the hills?
Well, there's absolutely excitement. I don't see anything slowing retail investors down. As a matter of fact, the way retail investors have felt it in the US is totally different from here in Southeast Asia, in a ways that here in Southeast Asia, especially in the Philippines, they're focused on actually getting into crypto right now. So they're kind of like late bloomers, but in a good way, because they know the benefits of crypto, the decentralization, the blockchain now. A lot of people are studying blockchain here in the Philippines. So a lot of more people are willing to invest right now. A lot of people have invested actually during this crypto winter. A lot
it's
overall,
on sale, right? Everything's on sale right now.
What's that?
Everything's on sale right now.
Yes, a lot of people are buying here. Not
People
much, of
call it
course.
crypto winter, but don't you think it should be called the summer sale?
Should be a summer sale. It's a matter of perspective, right? So it's a summer sale.
All right, so Asia's still interested. John, what are you seeing in? You're from France. What are you seeing in Europe? What are you seeing out there in the Middle East? What's going on?
Everybody is underwater. That's the truth. So basically, we spent more than a year above 40K, right? Above 30K. I think we reached 30K in February, and we broke down the 30K, I think, 2 months ago. So we actually spent a ton of time above 30, 40K, right? And people during that time were all about, we're going to 100K. And then we had this kind of double top, 60, 30, 60. So people accumulated there. And I feel like a lot of people are trapped. And a lot of retails lost a lot of money because everybody was super bullish over the past, 12 to 15 months, and I think it's a disaster. Retail is not going to come back anytime soon, especially as inflation's going up, mortgage going up, food's going up, gas going up. So who has money to buy crypto right now? Not retail.
Shai's fund does. Shai, you were talking about how the pension fund, it's sold. Is it time to buy the dip? Now you guys know all the procedures.
I think retail clients, they have a short memory. I understand what you're saying, John, and I heard you, but I think people have a short memory. Yes, it hurts, but once it starts going up again, 2022, 24, you will see all of them coming back, and even new blood, new money will come in. It doesn't matter if it will happen from 20 to 25 and then it will jump, or it will go down to 10, 12 levels and then it will go up. People have short memory. Look, you remember the March 20, Corona time started, the first lockdown, quarantine. You remember what was happened with the NASDAQ? It was like 10% in a day and fell down like 30%, and everybody thought that the economy is gone, take the key, close everything, and throw it to the sea. What was happened like 2, 3 weeks, 1 month after that? Everything went up. People have short memory. So once it starts going up again, everybody will come back, and new blood, new money will come in as well.
Okay. So retail, you think it's going to come back again, but is anyone focusing on the retail investor right now? Do you think that retail is still a priority for big companies? There's a lot of guys in this space. Well, there's a lot fewer today than there were 2 or 3 weeks ago. But are people concentrating on the retail investor, or are they going after institutions? I mean, it sounds like institutions have closed their eyes and they put their head under a pillow. That retail is kind of doing the same thing right now, and they're nursing wounds. Who is it that are we expecting Michael Saylor to come in and just buy pretty much everything? Are we expecting the El Salvador government to buy everything? Are we expecting your hedge fund to come, your fund to come back in, Shai, and ship it in? Like who are going to be the new blood?
I think you cannot talk about this market and talking about only one segment, whether is it institution or retail. Look on NASDAQ, okay? Try to think you close NASDAQ to retailers, only institution. Or try the other way, only retail, not institution. It doesn't work. You should have, in this game, you should have everybody. Maybe sometimes you might see that 80% of the volume comes from hedge funds and institution, and only 20% from retail. Okay, so if you take those 20% out, the volume on NASDAQ will decrease, not by 20%, it will be by 70%. So you have to have both segments in the game. And now if you ask me about the pension fund, the provident fund that I'm involved, again, director, investment committee, audit committee, from my point of view, yes, we will be there again, because I do what is the best for our investors. And if the regulator thinks that we should act a little bit different, we will do whatever is needed to be done. It didn't say no. He said you should take into consideration to rate the place that you bought, blah, blah, blah. Okay, we will do that. But if I think it's a good investment, I will do this again. And yes, it's only a question of time till I'll buy again. And I think 20 level is a good place to buy.
Interesting. Peter, what sort of regulations needed? I know we touched on it earlier today, but what sort of regulations really needed for, you think, your customers and you to feel more comfortable?
Again, I don't know whether it has to be regulation or self-regulation. By that, I mean more disclosure, right? It's got to be, what do we have? What, you know, we can talk about Tether, right? Tether keeps talking about having financials. They won't list their audited financials. And I think there's going to be a business opportunity for companies that feel comfortable being domiciled in a place that has laws that they can trust, right? And has more information. I think that's going to be one of the big business opportunities. And one of the things I see, and kind of why I'm a little bit bearish right now, continues to be, if anything, you're hearing people laying off, and it's coming in customer service. It's coming in those areas that would actually do a good job of attracting new investors. But I really think that if crypto is to thrive, you're going to see a set of institutions that people can have much more faith in, that they can trust who the actors are, where they're domiciled, how their money is treated. And I think that's what's created. And I don't care. And I think it's more important that that comes actually probably from the industry than from regulators, because people are going to have to understand this. And then I think there'll be an industry around people like ourselves who can explain to these people, okay, this is why this entity you can trust to hold your crypto, or this is why you need your own wallet, but here's who you need to use an accounting firm. So I think there's going to be an opportunity as this shapes up that, okay, the Wild West is probably in the middle of shooting each other. Something's going to emerge from this. And to me, that's where I would focus my opportunities and my investments right now, are companies that are building around something, an ecosystem that seems sustainable, where they're comfortable with transparency. So things like yourself, there's other entities out there that are willing to publish what their holdings are, how they behave. And to me, that is going to be, I think, what can let this business grow. And it's going to be less about chasing higher leverage or higher yields and more about, what entity am I really safe dealing with? And that, to me, I think, is what's going to take to get this thriving again.
John, you wrote most of the risk factors for the SEC for our prospectus, and there weren't risk factors before for blockchain type issuances. You know, what is it that, when you were talking back and forth with the SEC, I think it was 950 days, what is it that they were interested in, that they cared about? How have they changed since you spoke to them? And what do you see as being the great need right now for the industry?
So I've been actually pleasantly surprised by the level of understanding of the SEC around all the crypto aspect and technology, right? So actually the discussion and the conversation was fairly easy, right? They wanted to understand, how is it going to work? All the questions actually made a lot of sense to me. So I could answer actually also very, very easily, right? What really took time is for them to really grasp, how is it going to be? How is it going to work? How this offering is going to play out, right? And that's what really took time. Not really to make them understand what is Ethereum or what is a blockchain. Of course, in the process, I'm sure a lot of people on their side got educated, right? And they probably made their own research. And I think this is how we push things forward at the end of the day, right? Our IPO was pretty much a dream back in 2017. We achieved it. We succeeded at raising money from a large pool of investors. So we actually showed that regulation works. As a matter of fact, when you see all those ICOs without any regulation, raising tons of money, right, and then the SEC is going after them, then we actually show that if you follow regulation and you follow the right path, you can also be successful, right? You can also raise significant amount of money. You can also build a community. So so I think we proved the point here, and what needs to come, I think, in the near future is probably more companies taking this path. I think this is important.
Derek, is regulation as big a deal in Asia right now, or is there a laissez-faire attitude? Like, what's the thinking over there? Can you just do whatever you want? Is it the wild, wild east?
Um, I can speak about Philippines first. I think here in the Philippines, you definitely cannot just do whatever you want in crypto. It's definitely not Wild West here. Government has all of its hands all over the place, and especially like for young crypto companies projects, because they want to make sure they benefit from it and they get money from it. So here regulation will play a big part for revolutionizing crypto. While here in the Philippines and quite a lot in Southeast Asia as well, it's like I mentioned before, they're a little bit late in the game, because like the US and Europe has been first in crypto for a long time. They have established infrastructure, they have built the hype, the FOMO, but here in Southeast Asia, it's only happening now, and it's quite good timing because of like the summer sale and and crypto winter. But to actually make it move forward the way we've seen in the US, I think regulation will play a big part, and it's also a good thing because there hasn't been a lot of innovations, for instance, here in the Philippines for crypto. But those who have innovated have actually played their hands well with the government.
Do you think Asia's waiting for the US?
They're not necessarily waiting, but they are well along the same ride. And a lot of ideas that actually started in the US that didn't work have have been kind of like passed here in the Philippines or Southeast Asia, and it worked. So
Like
there,
an example?
there's where there's like games, for instance, like there's a lot of I talked about games before, but there are a lot of benefits that decentralization in crypto could provide developing nations. Of course, they could also provide it to first world countries, but it's different when developing nations actually feel the benefits, since they don't have enough resources like how first world countries have. So when a particular innovation goes to Southeast Asia or the Philippines, and it actually provides benefit to the consumers or the entire people, it actually just it goes viral. People will talk about it, especially if it's about making money. I mean, mostly it's all about making money, right? At least for now, which is why like social related crypto projects don't pick up much well. So it's mostly about the finance and like ways to actually make money on the side, for crypto.
You talk about developing economies. The cell phone was such a great event, I think, for developing economies that really didn't have much landline service. And they jumped from really having not much of a landline service to suddenly everyone's got a cell phone. And that cell phone is your wallet, and that's where your money is. It's on the cell phone. That's your bank. And this is going to be a question for you, Shai. It seems to me that digital, like central bank digital currencies, digital identities, looking at digital capital markets, all of this allows all of these emerging markets, these developing countries, to suddenly do this jump. Yeah, maybe they didn't have a big stock market. Maybe they didn't have a currency that people trusted. And maybe there was corruption all the way from the top, all the way down, because any distribution to the populace, someone's got their hands in the pockets all the way through the process. But with a digital currency, let's say, there's a lot more efficiency, and everyone already has a phone. They don't have a bank, but they've got a phone. Shai, what do you think about digital and how that's going to be affecting developing countries?
I think CBDC is a great opportunity to the world, because approximately 2 billion people in the world without a bank account. But as you said, most of them with a cellular phone. So it's like you shuffle the cards again in the world. We have the opportunity to give all the citizens of the world an access to a bank account by holding a private wallet identified one by one between the person and the wallet holder. So each one of them will be able to hold currencies, and it doesn't matter if this is going to be a dollar digital, euro digital, or I don't know, Brazil local currency or China local currency in his own wallet. Now, when you do something like this, in a way, you control many things that worries central banks and government. And I give an example. In Israel, for example, there's a new law came in like a few months ago or a year ago that limit the amount of money that two people can send between themselves. I cannot pay to Jonathan more than 50,000 shekel, which is approximately $15,000 in cash bills between us.
Today? You can't do
Sorry?
that today? You can't do that today in Israel?
No, we can't. I cannot pay Jonathan more than 50,000 shekel, approximately $15,000 in cash between us. This is between two persons, and if this is between individual and the business, it's 11,000 shekels, which is $3,000 approximately. And why? Because they're afraid of AML, anti-money laundering. They're afraid that I have in my house $1 million in cash, and I start spend money in cash. But when you have digital currency, it means that each wallet belongs to a person, and each currency with a specific number is being held in a specific wallet. It means that each time money goes out from one wallet to another wallet, you have a track on this. So in a way, it solves all, not part, all of the AML worries of the central banks. There is one example. Another example is security. Sometimes we think that blockchain is not secured. Hacking, just to remind you, 99% of the hacking, nobody hacked the blockchain. They hacked your computer and found your password and used your password to hack your money. So we spoke, I don't know if it was Derek or Peter before, spoke about intermediate. You don't need intermediate. I can send money to John directly without the bank in the middle. So the bank, it's not that the bank will disappear. I don't support this, but the bank will act as intermediate to deposit, loan, mortgage, other things. But cash, I don't need bank. I don't need intermediate as a bank. So what we believe that CBDC, central bank digital currency, it's the future. And let me put another question here on the table. Why do we need stablecoin? If we have dollar digital, why do we need stablecoin? Why do we need Tether?
I'll tell you why we need it.
If
I'll give an
we
example.
have dollar digital, it can be used for everything.
Peter, would you like the U.S. government knowing every single purchase you make?
I'm not going to comment.
That's why I think Peter would like a stablecoin. I think that in the U.S.
It's already the case.
That's true. They already know everything. But when you pay with right now, there's some secrecy when you actually pay with cash. When you go digital dollar that's owned by the central bank, there's not a lot of secrecy there or privacy there. When you use a stable coin, there's a little bit more privacy. And so I think that there's different standards around the world that we'll probably find. Peter, do you
certainly let me just add to that. I think that's clearly our view of the digital yuan is an attempt for China to have better access, better control over their citizens' spending, and ultimately the companies doing business in China. So I think the digital yuan will probably highlight a lot of your concerns there, Doug, about what good or bad comes from using a central bank digital currency. I think it's something people are going to have to deal with if they're doing business with China, because ultimately I do think they'll tend to expand this. I do want to say one thing. It's a bit altruistic. We talk about all these people without bank accounts, right? 2 billion people in the world, according to the World Bank, make less than $1.90 a day. So I think the real use case, and it's going to be figuring out how that middle class and wealthy can benefit in ways that aren't being served. I think that's really going to be the use case. And one reason I keep coming back to China as the most interesting use case is you do have this population that doesn't trust their government, that has an immense amount of wealth as a cumulative basis. And that's going to be, I think, a battleground of can they use this and how do they use this, or can they be suppressed?
Interesting. Derek, your thoughts. What's going to happen with CBDC? Are you seeing, everyone talks about the digital yuan. Are you seeing it? Are they talking about it in the Philippines?
Not really. I only heard about digital yuan, but I haven't actually explored it. But it's interesting. I don't have any comments to it, so I haven't really read about it. So
very good. John, you've been rather quiet, I think. I want to go back to, I guess one thing I'm surprised at is you said that you didn't think that Bitcoin was a inflation hedge, and I wanted to dig deeper into that because I don't understand your answer.
No, listen. At the end of the day, narrative follow price. It's not price that follow narrative, right? So we have to look at the environment, and people think, okay, Bitcoin, it's a store value, it's scarce, it's an inflation hedge. Okay, now look at gold. Gold has the same characteristic than Bitcoin. It's scarce, it's supposedly a store value, an inflation hedge. Guess what? We have inflation right now. Okay, very hot inflation, higher than in 20, 25 years, right? Since the 80s. And guess what? Gold is going down big time. Bitcoin is going down big time. So I'm asking myself, is this narrative really correct? Is it true? As a matter of fact, it's not. So I feel like I feel like this narrative was not really tested with real life events, because like I said, this inflation is really a thing for the past 6 months. Now, you mentioned, Douglas, no, but guess what? We have inflation for the past 10 years, but don't mix CPI inflation, right? Which actually impact gas, impact food, impact really primary needs of people, and financial asset inflation, which this we actually experience for the past 10, 15 years because of quantitative easing, because of loose monetary policy. Yes, more money in the system, then all the risky assets are going up. But when you have real inflation that impacts primary needs, which is the real definition of inflation at the end of the day, then the question is, where do you put your money?
Right. Thank you. Well, when we started this, the question really was burn or build. And I think that we've all come to an agreement that it's burn, where burn comes from folks that haven't been regulated or they've overstepped their skis. And then there's build, and that's sort of like continuing to build the foundation for this. But, based off of that statement, I'm going to go around here. Everyone's got a minute to really kind of make their final statement as we start closing this down. I'll give it to you, Derek, you can start.
Oh, statement. Wow. So just like in the crypto in general, like, right? Yeah.
Yeah. What your thoughts here?
Yeah. So I don't know. Actually, I'm very bullish about crypto in general. I'm speaking mostly for Southeast Asia and my country, Philippines, as well. Crypto gives the power to the people, and while it's true that crypto and blockchain technologies are technically, they can be self-regulatory, to actually make it more to make it more powerful, and to give it to citizens, like individual citizens, to actually make people use them and feel the benefits. There will be like a big play that the government have to like take, and I've seen that as here in the Philippines, and I've seen it. While it's not a fast progress, it's slow, but it's a sure progress. So I'm very bullish on crypto, and we should definitely build and focus on actually applications, just like Peter mentioned before, that could actually lift the lower income families and give them opportunities to make money, or other sources of income, and crypto, blockchain makes that possible. So I'm very bullish on that aspect.
All right, thank you, Peter.
So I think the biggest disconnect I have right now, we're talking to people who've been in crypto for a long time, is people kind of like, oh, shucks, we're down 50%. We've gone through this multiple times. And I think what has not been tested is this time about $2 trillion worth of money got wiped out. In prior 50% drawdowns, there wasn't that amount of money at stake. There's been tens of billions lost in private equity investments that wasn't done. There's now job losses in an area that was just creating. So I don't know that the reaction is going to be as easy to shrug the shoulders and move on this time. Maybe it will be, But that to me is, I think this is bigger, more problematic. It's permeating society. And I look at two classes of investors that I think have been really hurt. Those who are speculating whether they got stimulus money or something and we're trying to kind of get rich on relatively small amounts of money. I think they're in trouble, and I don't see how they come back. And then what to me has been the disruptive investor. And there were people who are at these disruptive companies. You didn't have to be super senior, right? With the SPAC market, the IPO, there was a lot of wealth. And those people tend to like disruptive companies and crypto. And people maybe went, so let's call it hypothetical, 5 million on paper to 10 million, thinking they're going to be worth 25. Now they're back to 5 million, maybe even 4 million. And I think there's going to be a bit more thought about how they risk management that personal wealth. And I think that was another subset that drove the last couple of years. And I think we're going to see a little bit more pressure, because I think the amount of wealth that was destroyed this time was much larger, and it was relatively concentrated. It wasn't, like the 401k, which kind of hits broad swaths of the population. I think this kind of hit unique segments. I don't think it's over. Maybe if the prices keep rising, it's up right now, maybe that gets the FOMO going back in. But to me, the amount of wealth that was destroyed this time is very different than prior crypto winters.
Great points. John?
I want to say something. We always talk about price, 50% drawdown, and everybody's looking like how much money we lost, how much money we made. And sometimes we are forgetting what's going on and what is the big picture. Crypto is actually the first, I would say, movement that came, kind of bottom up, right? It came from the people. And I think it's really important because it's really unique. It gave, and I think Derek said it very well, it gave opportunity to people that didn't exist before. Usually VCs have the best opportunities, funds have the best opportunities. And guess what? When retail has the opportunity, when the company is already tens of billions of dollars and it goes IPO, and then there is no money to be made anymore, right? So crypto gives a lot of opportunities to the average people. Now, yes, the 25x trader, don't do that. Speculation for speculation, don't do that. But look around, look at what crypto produce, and it gives you the opportunity to be part of it. And I think this is what we need to remind ourselves.
Thank you. Shai?
I think what all what we talked is and what John and Peter and Derry just said. We just need to add one thing to this regulation, and this is what INEX is. You cannot work with trillions of dollars in this market without regulation, and this is the difference between INEX and many others. We have $40 million capital reserve to protect our investors and our traders. We report to 102 different regulators. We are a broker dealer. We are under the SEC, and this is the main difference between INEX and all the rest. And if you ask me about my vision, 2007, I think it was, there was a crazy guy. I think his name was Steve Jobs. He came with a crazy idea of telephone with no buttons. And I really remember that I read articles where people said 3%, 5% of the population will adapt it. A few years after that, we don't see even one telephone with buttons. All of them are smartphones. And this is what I think will happen to this industry. I hold here my wallet. Bills, we don't need this. It will be digital currencies. Credit card, why do I need this? Everything on my telephone. Vaccination card, why do I need this? On my telephone. What else? ID on my telephone. It will be smart contract. Everything, I don't need this. Everything will go to one unit. It will be in my wallet, identify one-to-one on me, and everything will be digitized. 2 years, 5 years, 10 years, I don't know. 100% will go digitized. Assets, equity, currencies, IDs, passport, vaccination cards, everything.
All right, we've got the picture. Listen, guys, thank you very much. Peter, thanks for joining us from Connecticut. Derek, thanks for coming in from Philippines. John, Shai, thanks for staying up late. That's all for us today. Thank you very much, everyone. Cheers. Have a good night.
Thank you so much.
Thanks for hosting this. This was fun. And
Pleasure. Nice meeting you
Bye-bye.
guys.
A one-stop shop for cryptocurrencies and digital securities. When others ran from regulators, we found a way to work with the biggest. The crypto trading powerhouse that brought you the first SEC-registered security token IPO offered to the general public is now ready for the ultimate bulls versus bears showdown. The question is, are you? Apply now at inx.co.